Hi guys, we are live on Twitter and on YouTube. Welcome to the show. So today I would like to talk with Curtis here. We have met for the first time in Japan. We've been following each other on Twitter for several years actually. In 2019, you invested in Tesla thanks to my work you shared earlier.
Yeah, Tesla, thank you for that.
Yeah, so you've been following me since that period.
Before
probably?
then, way back, so probably 2016.
Okay, yeah. I was talking a lot about crypto. So we were riding the crypto cycle of 2017 and together, and together failed to sell at the top.
Yes, absolutely.
Of 2017. And actually together failed to sell at the top of 2021 also.
It's a good pattern.
So we are good compatriots. We do hold one big difference in opinion about Bitcoin BTC versus Bitcoin BCH. You're a big Bitcoin BTC investor and you still believe in that strongly. Whereas I have not invested in it for a long time, since 2017. What I like very much about your work is your macro view is very supported. Like you really have very good arguments why you believe we're in a long-term bull market, and we do agree that will be the most crucial part in whether we're going to make money or not, because crypto is very correlated to the stock market. So I really like following your arguments about the bull market very much. And also what I like very much about you is your very down-to-earth approach to investing. You're really a self-made man. You've made your money on your own. You built a business and then you sold it. And then you've been investing that money since 2018 or so. But you've been investing years before also. Actually, many years. You told me your father even introduced you to investing when you were a teenager?
I think I bought a bar of silver when I was 6 years old.
Wow.
I mean, my father bought it for me, but yeah, he was a gold guy way back then. And he always had books on his shelf about, gold, $10,000 and things like that. But he definitely influenced me to think about money and think about investment. In my 20s, I was backpacking a lot and traveling, so I didn't have a lot of working capital to invest a lot in stocks back then. But I've been following markets since my 20s, and then since about 2018, more seriously invested with a significant portfolio. And
that explains your results. You have about around 20% compound annual growth rate since 2018, since you sold your business. But you would never have achieved that if you would not have like years of experience beforehand. If you just would start investing in 2018, you would very unlikely have had such results. Also, you really read up, and we share actually the same history as growth as an investor. You shared with me before that you've read all the books from the gold bugs and been following their work also.
Sure.
You mentioned Mark Faber. Jim Rogers at the time was very popular during the financial crisis of 2008.
Peter Schiff, back when he called the real estate in 2007, crashed. I'm not a big fan of his now, but definitely he was had a good view of the markets back then. Jim Rogers, Mark Faber, who talks a lot about portfolios. Mark Faber, very long-term views of how to deal with uncertainty and having balanced asset classes and trying to be a long-term winner in the markets.
And you read also his book, Tomorrow's Gold?
I have not read that. Mostly things I've seen on videos, interviews. Even guys like Jim Rickards, who are a bit on the edge of currency wars.
You did read that book. I never read that.
Some of what he says, I think, is really valuable. I think some of these guys are selling books, like Robert Kiyosaki has really disappointed me with he seems to just want to sell his content and making really bad calls and not balanced views. So
very, very much so. Rich Dad Poor Dad was an amazing book. But indeed, he has been making terrible calls and market calls. That's very interesting. I believe also that you really need to go through, at least for me it was the same, you really need to go through these phases and these kind of different viewpoints to get your own more balanced viewpoint.
Yes.
And I can tell you have done that. But also I really like, we talked before actually, Twitter's Spaces, I remember, to really get to know you, which was at the bottom of the market in 2022.
Right.
I started with Twitter Spaces and you were popping on there and you were actually very, very positive about the markets going back up. And you really helped me a lot and also turning to remain positive and remain invested, even keeping on some leverage. Even though I had lost 90% of my portfolio,
right.
You were really helpful in keeping it intact and keep believing, and allowed me to recover a little bit of the losses I made then later in 2023 and 2024. So yeah, thank you for that. It's really this kind of sharing of your work online for me has really also given me a lot back from people like you. And some others in valuable feedback. So that's very cool.
Yeah.
Last week was very painful. I lost all my gains of about 20% of the year, back to zero. How has it been for you? The drawdown
last week, and then today the markets just bounced back. So we had the Nikkei go back up about 10%. Bitcoin came back from 49,000 up to 56 today. So we've had a good bounce back.
Yeah.
I've done well. I've been in the markets pretty heavily since 2022. So October of 2022 was, I think the S&P was at 3,500 and people were saying 3,000 or lower. And that was the bottom, 3,500. And we went the other way. So I've been fully invested since then. So this year, big Bitcoin positions done well. MicroStrategy, obviously, as a proxy, is up a lot. So I'm
still invested in that also.
Yeah, I got back into.
You had a stock market, or
yes, I use an account for trading. And then some others. I do have a Tesla position still, about a 10% exposure to Tesla. It hasn't done so well, but hope springs eternal. I'm still very bullish. It's the ultimate example of how there's a dissonance between valuation and perhaps perceived value. So on both sides, it either overshoots or it undershoots, it seems. So I'm quite bullish about the full self-driving and the Optimus robotics. And to me, they're both very close to functioning AI solutions. So big on that. So not so bad. I'm still up for the year. Fairly significantly. Yesterday, so Friday we had the really bad jobs report in the US, and then we had the yen, the Japanese Bank of Japan raised rates 0.25. To me, it's not a big issue, but it triggered a reverse of the carry trade, apparently. I don't know if that's true, but that's what people are saying, that there's a carry trade where you borrow in yen, very cheap, low rates, and you buy assets in US dollars, and then that's very profitable because you have US rates at 5.5%, right? So you're borrowing at 0% in Japan, you're getting 5.5 risk-free. So there's tons of money that's in that carry trade, and if that reverses, that's why we might have why we might have had that on Monday. Yesterday we had the Nikkei crash 12% or something like that. So that Japan carry trade is something to watch. Problem is, I don't think anyone knows how big that is. We've heard something like $20 trillion are borrowed and then invested. And does that reverse or not? I'm not as concerned as some others, but back to your question, I'm still doing fairly well this year. Yesterday was a bit scary. I'm still a bull, but I'm a little bit more cautious than I might have been 2 weeks ago because of the bad jobs report on Friday. And even if the U.S. economy holds, I think the bull thesis is getting bruised a bit. I think some of it is maybe profit taking. Like when the market sold off 3% yesterday, I think that was people in profit who are afraid of losing their profits and selling off. Not necessarily that they're bearish, but rather they're afraid of losing of selling the top, like we were just talking about. Right? No one wants to capitulate at the bottom, but you also don't want to miss the top. So it could be just profit taking that we had. So
So how much percent are you now in cryptocurrencies in your portfolio exposed to crypto?
Probably about 40 to 50%.
Yeah.
If you include proxies, miners, crypto, 50%.
Yeah, and then you around 10% Tesla, and how's the rest of your portfolio?
Some other stocks, and then other private investments, let's call them.
Yeah. You're also in the real estate. You shared earlier.
Yeah.
Quite a big position.
Yeah.
That's just Japanese real estate.
Yes, currently.
You did well on that actually, which was a very good call of you, because that was one of the worst markets, going down for 30 years or 20 years.
Yeah.
Real estate in Japan, and you did end up buying, and it did go up. So that's nice.
Yeah. So since 1990, you had the bubble burst in Japan, and then you've had good 35 years. They used to call it the lost decade.
Yeah.
Now it's three decades. But in the last 2 years, 2 or 3 years, you've definitely had a move up in central Tokyo. Real estate's gone up a lot. And then the Nikkei is back at all-time highs, except for the crash.
But so real estate went down or sideways for 30 years?
Oh, it crashed massively, and then bottomed, and then now it's catching up. Same with the stock market.
So how much did it go down over 30 years, real estate?
So at the peak, the Japanese, they thought Japan was going to take over the world. There was movies about Japan buying American companies in the 80s, right? So it became part of the general understanding that Japan was going to take over, because they had a boom after World War II, massive, very highly productive companies, and real estate. I think the Imperial Palace land was worth more than an entire Los Angeles or something. It just got
the valuation was crazy.
I've heard more than that. So it went way up. They also overbuilt, so they built hundreds of ski resorts and tennis clubs and beach resorts, and they overbuilt, so they had a massive crash. I don't know the numbers on that, but so, and the stock market crashed.
But did it go down 90% real estate or 50%?
I really don't have that number. Closer to 90 than 90%.
But it's not really. It's very hard to compare with other regions, because valuations were absurd.
Yes.
But actually, you do have absurd valuations. Actually, you could make that case in many other regions today. Also, China, when interest rate, rental return is less than 1%, 0.5% or so on properties. These are absurd valuations. But in Tokyo, it went even higher than that in the 80s. But still, very important for investors to realize that real estate can actually go down in fiat value for 30 years. That's what happened in Japan, in Tokyo. Welcome all. We're at the live show. 8 people joined. Thank you, guys. Shoot your questions or remarks, so I have something to talk about. It's very nice to have a live show. I did a live show yesterday also, very shortly, walking outside here in Tokyo. You can also watch that on this YouTube channel. But the quality is not that good. The audio was not that good. I hope the audio is better here, guys. Can you also let us know if the audio is good? Let's say Bobby Boucher. Mark, how much better would you be off if you just stayed with Bitcoin BTC?
Ooh.
A lot
Shot
better.
fired.
Certainly. A lot better, actually. I remember at the peak of the 2021 market, I was up a lot. I had a compound annual growth rate of 40% or so since 2008. And I also did the calculation. We would have been better off holding Bitcoin BTC, but I'm counting from my first BTC that I bought in 2011. And I would just have hold on to that, or all the work I did instead up until the top of 2021, which was the better move. And actually it was equal.
Interesting.
But that's not the case after the crash, because now it's not equal at all. I would have been a lot better off just holding the Bitcoin BTC. Because actually at the top of 2021, I had taken on leverage. And I was not investing in Bitcoin BTC at all. I was investing in other coins like Bitcoin BCH, and they were also topping out at that moment. At around
hindsight. You didn't know that? You were in the NXT was a coin. Remember?
That was years before. But at the top of 2021, I was mainly Bitcoin Cash, and it dropped a lot more since then. But also I lost the far majority of my position due to leverage and being called on my loan. So that's why now I'm a lot worse off. But to be frank, I don't think this is. Of course, you can do that calculation, but it's not really. It's not valuable. I don't think so, because an investment that works out does not have the right, like the odds in its favor. That's my opinion. Then when it comes to Bitcoin BTC, that does not prove that you were right. I divested from Bitcoin BTC in 2017. Fully, but I was start already investing in coins in 2013. Like already 2 years after investing in Bitcoin BTC, I could see the narrative that Bitcoin BTC will remain the leader and that there is no value in competitors is wrong. And I invested in the early altcoins, Litecoin, Peercoin, and then I continued to do that, and I stopped investing in Bitcoin BTC in 2017. But the arguments that I gave at the time are still valid today. And yes, I was wrong and totally wrong in predicting how high Bitcoin BTC would go, and also in predicting how long it will keep its dominance. I'm very surprised it still has 50%, even almost 60% market share. Like, I was totally wrong in these predictions. That's true. But the arguments that I made were correct and are still correct today, that the use cases continue to drop and go away for Bitcoin BTC due to how it's been managed and built. And so, it's the same as, for example, someone who in Japan says in 82, like, hey guys, real estate in Tokyo is absurd valuations. We're now at less than 1% rental income. Like, this makes no sense to invest in real estate in Tokyo. And then for the 8 years after that, it continues to go up to valuations where the whole property market is the same as the total of the rest of the world, of one city.
You have to trust your logic and your argument. Otherwise, you're lost, and you should just invest in mutual funds, because if you can't create a logical argument as to your thesis to invest, you have to trust that, even if you're wrong. And I'll add to that, rather than getting too deep in the Bitcoin versus Bitcoin Cash. I'm a Bitcoin. I would argue on the Bitcoin side. However, even if you're right, this is a famous quote in the markets I sometimes quote. Even if you're right, if the market disagrees with you, you're still wrong. Now, you can be right logically, you can be right morally, you can be right eventually, you can be right, but if the market's disagreeing with you, you're still wrong. So, for example, Tesla. Even though I think I could argue for 5 hours about why it should be much higher, the market is currently disagreeing with me, and a lot of people have lost a lot of money in the short term. I may eventually be right. I trust my logic, but right now I'm sort of wrong in this. Let's say in the last year, my bet on, and it can be the same. Whereas with BCH and Bitcoin Cash, even I don't concede all the points, but let's just leave it sort of neutral. But even if it's true that it's better peer-to-peer cash, it has lower transaction fees, perhaps the block size should be larger. Let's grant all those things. If Goldman Sachs still buys Bitcoin and drives it up $5 trillion in the next 5 years, it still will be the wrong thesis. Now, that doesn't mean you're wrong or that your thinking was wrong. It just means the market disagrees. And we need to have that caveat, right? For example, I think the gold bulls, the gold bugs have been right all along. I think eventually the whole debt system will implode, but they've been wrong for a very, very, very long time, right? They've not even outperformed the S&P. There's been a lot. So the gold bug, and they've been wrong versus Bitcoin as well, right? And so you have an example of very smart people understanding Austrian economics, and you can still be wrong if the market disagrees with you. If the market wants to buy Nvidia and you want to buy gold, you're losing, even though you might be right that Nvidia is overvalued. So it's just a caveat to remember, and not getting too stuck with it, because that's what I would add to that. But you're right, I agree with you. What you're saying is you believe your thesis on Bitcoin Cash. You think you're right, and the gap between the market performance and your ideas does not discount the validity of your logic, right? I think it's a valid, and it may play out. It may still come true.
No. Like I actually think that my investment in Bitcoin Cash failed, and it's not likely that the thesis that I had about this currency and this project will come out. So I think I lost there. I don't think it's likely Bitcoin Cash will succeed anymore. I've changed my mind on that.
Okay.
I still hold a position, but
I may have misunderstood what you're saying.
Yeah.
Okay.
And I failed, and there's so many coins I invested in that failed in becoming successful. NXT was one of them. Byteball, that's they called Obyte, was one of them. But I think that's just normal when you're an investor. Most of your investments will fail, but if a few of them succeed, you'll be okay financially, and you will have your 20% compound growth rate. What I say is that, and I agree, the market is always right. I understand that approach. And if a certain investment continues to go up after you predicted, it's unlikely to do so. Well, I mean, that does not prove you wrong.
Right.
But I also I'm surprised that it continues to go up. It continues to keep its market dominance.
Right.
But that does not mean that I did the wrong thing.
Absolutely,
because you cannot predict how high and how overvalued a certain asset will become. But it is, as an investor, not a sound strategy to count if your argument, because I believe, but that's our difference in opinion, that that's not a good, like that the value of Bitcoin BTC comes from people just bidding up the prices, but without any sound fundamentals. But we disagree on the sound fundamentals part.
To an extent. To an extent.
Yeah. So,
but not entirely. So, for example, I don't mean to interrupt you, but so part of my thesis for Bitcoin was the price will go up. That was a big part of that. Like, I do understand the crypto ethos. I understand private money. I understand decentralization. I understand block size. I understand all of those points. However, I also thought that there's a lot of argument that the top coin would get the institutional adoption and price will go up. And whether that means it becomes overvalued and crashes later, I don't know. But I was making a financial bet on Bitcoin being price-wise dominant versus Ethereum and these other coins or on a road. So it was a financial bet. So in a way, it's sort of divorced. Like, for example, it's going to get in the ETFs and all of that. I think this is locking Bitcoin into a permanent asset class. Some people like that, some people don't, but I think it's just a fact when Larry Fink is on TV. And I think he'll bring Ethereum in too. I think they're going to bring Ethereum into the legitimate global asset, and I think it'll do very well for Ethereum. This is irrespective of whether Ethereum is great or not. It's just going to get sucked into that market, and it's going to be a lot of money chasing a small, low liquidity pool. So the price is going to go up.
And
so I think we disagree, or we agree on that. You know, like, it's just a matter of fact of what's happening.
Well, if you would have made me this case in 2017 when I decided to go out, I would have said, yes, that's certainly possible, but I wouldn't dare to bet money on that.
On institutional adoption.
Yes.
No, it's even exceeded some of the Bitcoin Maxis views of Larry Fink or Donald Trump. 2 weeks ago was at the Bitcoin conference saying he's going to make it. I'm going to protect your coins. It sounds almost like a movie, right? It doesn't sound realistic.
But we're also like, it seems for me, it's not a strong enough thesis to invest in something, because I like to always make comparisons with other markets, because otherwise it becomes very hard. But if you compare it to another market and you would make the same case, like, people accept like that's not, you should not invest like that.
You should buy a company because of fundamentals, not hype. I get your point.
Well, this argument is the argument of buying the index. Like if you buy the biggest company because it is the biggest company and because you believe there will be a lot of money added to the market and the biggest company will benefit the most, well, that's called index investing. And I don't do that because of the arguments that I believe, like that old value investors like Peter Lynch.
Yeah.
Like when you learn about investing, you're not learning. There's only one branch in investing that says you should be index investing, and the arguments they give, I don't agree with. They say like, yeah, it's very hard to beat the market. It's very hard to find value. You're much better off investing in an index, and you will get 7 or 9% per year, and you make real money of about 4% per year. And this is on average over the long term very likely. I disagree with that. I don't believe that is true. I believe that that has been true, but it's unlikely to continue to be true,
right?
Because it makes no logical sense. If you just invest in the biggest company in the long term, you just if indexes can only achieve inflation, they cannot make real profit.
Right.
And we're not even aiming for 10%. We're aiming for 20%. So you will never achieve that with indexes.
And therefore, you need to do your own fundamental analysis and bet on the core of the business.
Bet on businesses that have much more potential. And there you then need to look at rising revenue growth or rising earnings and how it's managed and all that. So if you apply this investment approach to the cryptocurrency market, that's what I believe is the right thing to do. And so if you make this thesis like, but Bitcoin BTC will have very likely most of the gains thanks to all the new money coming in and betting on the biggest horse. Okay, but like I would say that's not a sure thing, but okay, it could certainly happen, but I still don't want to invest like that.
Right. All right. Should we talk a little bit about markets? We could go to another question, or we could talk about markets moving forward. I don't know if you had any specific questions. So I've been a bull for about two and a half years. Looking forward, we can look at Q4. I don't know if you have any specific.
Well, maybe you can get through the strongest, like the people that make the strongest case that it's likely to collapse. What do you say to them? For example, now employment is going up. Like you can show statistics where actually we're going at a very dangerous point where when unemployment goes up, and with this inverted yield curve story, the probability for markets to have a serious correction becomes high. Is that the case today or not?
So is it the case that job unemployment is rising?
Yeah, but also that means that historically.
So I posted on Friday. My line was rate cuts don't cause recessions. Okay, what I mean by that is, and to your point. So historically, as they've cut rates, you've had a turn down in the U.S. economy. Okay, but that's not causation. There's a reason for that. There's a reason because they usually cut rates only after the economy started to fall. So if they cut the rates in September, I think you could say there's two scenarios. One is they cut rates in September and the U.S. economy is in recession. If that's true, let's call that option A. They cut rates and the U.S. economy is already in a recession, or it's going into one very soon. In that case, we're going to have a modest crash. It'll probably be a couple years before we recover. I think that's very feasible. Option B is they cut rates, but actually the U.S. economy is not in a recession, and it either continues to grind or even strengthens, right? In that case, we likely have about a 30 to 40% upside in the short term. So if it was to simplify that for discussion points, which are we? Are we in an actual recession? Because usually when they say we're in a recession, they say we were already in a recession 6 months ago. We're just telling you now. Or a year later, they say, oh, actually, that was a recession. So they don't even know. Maybe we don't even know. But I look at the real GDP numbers. So last 2023, we had a 3% growth in real GDP in the US. So they added 1.6 trillion US dollars to the US economy, which is the entire size of the Spanish economy knocked on. Okay. Q1 of this year, we had 1.6%. This is real GDP. It accounts for inflation. And then second quarter, we had 2.6. So we're trending about 2.1 the first 6 months. Now, if you tell me, well, the government lies about their statistics, it's very hard to continue the conversation because it's like, well, then we have no data. But let's assume that data is correct. We still have growth, right? A recession is 2 quarters of negative GDP growth. We're probably not getting that. Unemployment rate up to 4.3% is a bad trend. Yes, it looks like as it rises, it then rises quickly and knocks us into a recession. It is possible. The job market is weakening and the economy is slowing. But the question is, do we just flatten out or do we go negative? I'm not sure about that. There's one comment that the July jobs report, it was 114,000, that it might have had something to do with seasonal effect or a typhoon that month. So it may be, I think the next job report or the next 2 are really important. If we bounce back, I think we're good till the end of the year. Obviously, if jobs fall off a cliff, it's bad. The next thing will be set to say, even if we get a recession, that does not mean that asset prices fall. So I think you and I and everyone listening, honestly, doesn't care so much about whether we have a recession, but rather will asset prices fall? We're all selfish in that sense. In 50% of recessions, asset prices go up during the recession. I think 16 out of 31 US recessions have had asset prices higher at the end of the recession compared to the beginning. And that makes sense also because you have the lead time, right? So actually, if we're in a recession now, it probably started a few months ago, asset prices will go down and then end higher by the time this recession's over. Does that make sense? Yeah. So even if we get a recession, it could be a very shallow recession, and it could be a recession where asset prices actually go higher. Now, why would asset prices go higher in a recession? Obviously, money easing, printing, government spending, etc. So there's a lot of plays here, but I think people have to separate. Are we talking about a recession and the actual strength of the US economy, or are we talking about our asset prices going up? And if we mix them, we get confused. And confusing too, because again, prices could go higher even with the average American worker losing their job. I don't know if that answers your question or makes it more confusing, but but nobody knows also. Nobody knows, right? So I've seen the jobs go up for 25 months. We've had 25 months of US job growth. The last July was the first really weak one. So maybe I'm getting a little bit more cautious. But it's just as likely as we get a revision upward next month. It's very possible. So what do? It's hard to say. I think you watch closely. If you have a diversified portfolio, you're not so worried, are you? If you're 100% crypto, I think you should be very careful, because if the market turns over, you're going to have it dragged down. Like if we get a Lehman shock 2008 crash, I don't think we will. But if we get something like that, yeah, you're going to get wiped out, right? So I'm in a risky position being 40 to 50% crypto, absolutely. But if you want to sell the top at the right price, you have to take some risk.
Yes.
But if you have a Mark Faber balanced portfolio, you're not so concerned. You're 25% stocks, you're 20% bonds, you're 20% gold, maybe you're 20% crypto, or you're spread out.
Let's get back to that later, maybe about gold. Let's take a look at the questions here. Sridhar says, this is a great combo. I have a question for Mark. How does he identify quality YouTubers and Twitter personalities who give great take, but not necessarily are famous yet? Most people don't have a big following. Yeah, actually, this is my way to invest. Is I read people's work, and I really like very much Twitter about that, because you can click on, if you see an interesting comment, you can click and watch their profile and watch their other tweets and replies to other tweets. And I end up doing that. For example, now on Twitter, I'm doing it with Sonny Mulder, all his replies. I do read them because I think he makes very good arguments. Or Decentralized Dave also. I make sure to check your posts from time to time. And I do that also. Reddit is also good, that you can check all the history of the posts. Also, it used to be bitcointalk.org at the time. I'm not using anymore, but that forums also allow to read all the
And why posts. Do you like to read down so much?
just people like to learn about a certain people. If they say interesting stuff, it doesn't matter who it is. They have an educated opinion. I can learn from them a lot, huh? and that's how I discovered people. Now, for example, I'm a new community, Microcap Explosions, from Marius. He's on YouTube. He's talking about small cap and micro cap stocks in the Canadian stock exchange, especially. He also has a community, a forum. So they're like the people that make interesting posts. I read back and I want to see their opinions on these different stocks. Huh?
Right.
And I don't know how you.
Well, you can also. So I find the most useful Twitter exchanges after the headline. You know, the fear porn or the whatever the fire, the world's going to end. If you actually ask them follow-up questions, number one, half of them will not answer you. They're just here for the headline clickbait. But you actually, when you go into why do you think that, that's the useful discussion is deeper in, because anyone can share a headline. But when you dig in and you get why are they thinking that? That's where I get my value, almost the debate level. And also whether they actually care about what they're posting about. Because if they're not going to get back to you, or they don't have a good follow-up, so why do you think the stock market's going to crash? What about this? That's where it gets interesting. So it's also, that's the value of Twitter for me, is that deeper in the chain.
The discussions. I recently discovered Aaron on Twitter, who's really into privacy coins. He's an anarcho-capitalist, so he's very anti-government. But he does make very good points. And I learned from him, and that's how I also got an interest now in privacy coins in cryptocurrency more. Let's go to the next question. Big Wheeze. So when does Donkey Kong come into all of this? I don't know what you mean, Big Wheeze. Donkey Kong. Sir, please put 1% of your net worth in Dogecoin. I am invested in Dogecoin for a very small percentage already. Sridhar Reddy, have any one of you heard about psychedelic companies working on treatment of depression, addiction, PTSD? It's a big market to tap into. Results are fantastic.
Yeah, there's quite a few now. West coast of California and even I think Vancouver, Canada. I'm not sure. I think a lot of the companies are in the US, but I think Mind Medicine is one. There's a few, and so for a long time, psychedelics were illegal to even experiment with. You couldn't use them for therapy. There was some, antidepressants are a format of that, but they were always registered with the government. So there was a block, but more recently they allowed psychedelic research to happen in terms of specifically with PTSD, like war veterans that come back from the war and have PTSD. They started using some forms of, so MDA is one, to help work through that. And they've had very good results. And so there's companies now that have licensed this technology. Now, the question about those technologies.
So has it become legal to use?
It's legal to do therapy with some of these. And then there's companies that I believe that own some of the, what they call them, patents, I don't know, but some of the technology. I would be to the question, I would be careful about finding a new interesting field that might have value. It doesn't mean the companies are going to make a lot of money in it, right? You don't know which company in that space is going to be profitable, or that even if it's monetizable, right? So it could be something great that everyone can then take these drugs to heal themselves, but maybe you can buy it at 7-Eleven, who knows, in the future. So it's not necessarily true that those companies make money. Also, like CRISPR technologies, the gene, Kathy Wood has the ARC-G, which is genomic. It basically has to do with DNA mapping and being able to splice or cut out bad code. I'm not a scientist, as you can tell, but basically predict or alleviate certain types of genetic problems. Now, that doesn't mean all those companies will get rich. Maybe one does, one doesn't. It's like betting on Facebook versus MySpace, right? You don't know. And with AI too, we don't know which is going to be the winner. So be careful about jumping all in just because they're in that new space. In fact, usually the pioneers don't make the big money. It's latecomers that come in. So that's all I would say about that. But it is an exciting area. I think MMED, mind medicine, is doing well. But
you're invested in this sector?
I had owned it for a while, but not much. And same, I'd owned CRISPR, but it's sitting flat. So when is it going to go up? So you don't know.
So you do the fund then of ARC Genomic? Or?
I don't own it anymore. But again, it's okay. How long do you have to wait for this to take off? And then will Kathy Wood own those right companies?
Yes.
Or maybe is there really that much money to be made? So you have to answer all those questions, and you're definitely in a high risk, because even if you get the space does well, doesn't mean you're going to make money there.
Yeah, that's I agree with that. Do you think the winner in the US presidential election will have a significant impact on BTC price for the next few years?
So
this was a question by Yep. Hi, Yep. How are you?
I do have an answer. Yep. And
babe, you want some more coffee?
Sure.
She can maybe get some. Huh? Would you like to get us some more coffee, baby? Huh? Down? Huh? For me, just normal black one. Huh? And you, what do you want?
Yeah, regular black.
They also have a caramel.
Oh, caramel would be great.
Yeah. And for me, the black one. Huh?
Yeah, thanks a lot.
And a glass of water also, baby, for me. Huh? Later.
So to answer the question, normally you would say actually the U.S. economy does well under both Democrats and Republicans. It does equally well under Obama as George Bush. So generally speaking, the economy probably does well under both. And the reason is they just spend so much money, and Trump spent a lot of money too. So the government spending, its fiscal dominance, it drives salaries and it drives GDP. In this case, when you have Trump at the Libertarian Conference saying he's going to allow people to have self-custody on their coins and support Bitcoin, I think it's that Trump is probably the more positive candidate. I would definitely, as a U.S. I'm not, but I would vote for Trump on that. On if you're just trying to pump your bags, absolutely. And it's a good thing. And I think it will affect other coins too. I think it will allow other decentralized products to be allowed, and it will probably squish Gensler and Elizabeth Warren and these people that were trying to really restrict crypto. So I think it's good for all coins, not just BTC, for sure.
Yeah, you also mentioned that you think Trump is actually very important that he wins the election for other.
Yes.
Can you elaborate on that a little?
I think it's pretty well documented that he's an anti-woke guy. I know people hate his personality for many reasons. I think he actually cares about Americans. I think he's what you'd call an economic. What is meant is he gets voted in because the average American believes he's actually going to help them improve their lives. And I think that's sincere. I think Bernie Sanders was the leftist version of that, where he was popular in his Democratic runs, that people actually did generally believe he cared about people's lives. And I think that's where Trump and Sanders have something in common. They're both legitimate grassroots candidates that are supported by average everyday people. I don't apologize for supporting Trump. I don't think the Democrats are that anymore. And so that's as far, I mean, we could go on more. I think even foreign policy, not going to war was a major accomplishment of Trump in the last 4 years. So,
yeah, that's a big thing. I also believe that it is important for him to win over the Democrats. Yeah, I think it's very important actually, and actually you make the right point. The anti-woke thing is very important. It's a problem in the United States, but in so many other Western countries, Canada, Australia, and Western Europe, they really suffer from this very leftist policies, and I think also it's very important for that to change. The biggest Okay, there we also differ in opinion. How far is it going that governments are exploiting people? And with all these crises that we have, COVID crisis, 9/11 at the time, the terrorist attacks, the financial crisis in 2008. I've started to see a pattern where it's my opinion that actually many of these crises are actually caused on purpose by the government to create a crisis that allows them to print a lot of money. And that's really how the system works.
And not only that, but to create to increase their power on a regulatory level or any sort of level. It's just they get their hooks deeper in society. Look at COVID was not about printing money. It was about controlling your freedom of movement. It went way worse. They went into your lives, and whether you have body autonomy, you can't even make your own choices about your body. So they're getting their hooks in on many levels, not only the money printing, which is probably the worst.
Yes,
but absolutely.
Yes. And I believe that Donald Trump understands this and is trying to fight this as much as possible. But he did really fail. He had to cave in the COVID. Like I think he tried to really not have that happen. This COVID pandemic. It started in China. Other governments copy it. He didn't want to copy it. But the pressure from the competition, which was the Democrats, was so high, and many Democrat governors were just copying it. And comes a tilting point where you actually have to go along with it, or you lose your power. And I think that's what happened to him there. But after that, they did print so much money again in the United States, and he was still a president then. So I think like he could have done a little bit better on that front, not allow them to print so much money. And he even goes so far as to distribute it to the people. Thank you, baby. Thank you. You want to show yourself, baby, to the peoples? Come, sit here. Don't be afraid. People can ask some questions, maybe. But it's a live show, and they can ask questions here. Come sit here, sure. They can see you. You can go then after showing yourself. After showing yourself. Yes. She's too shy. Sorry, guys. She's not coming. If you want to see a beautiful black lady, you need to speak up now. But yeah, I think it's very. What I love about Trump is that he really goes hard against the media establishment. He's the only president and only leader in the world that I've seen doing that. Instead of colluding with them, as almost all of them do, and maybe behind the scenes they will try to manipulate them a little bit, but he's like really calling them out on their fraud, on their fake news. And he's very good in calling them out.
That was his entire campaign strategy.
And so for that reason, that shows that he really wants to change the system, the corrupt system of where the government, together with the media, is always fooling you into a crisis, and then we all pay a very big price for that.
Absolutely. Sonny Mulder had a question for me. He wanted to talk about the JPY crash, and the Japanese yen crash, and expectations. And do you think new money printing is to be launched because of? Oh, that was from Decentralized Dave. Do you think new money printing is to be launched because of Japan? So going back to the Japanese yen. So yeah, the Japanese yen has been crashing up until more recent. So the yen has been weakening for a long time, since the bubble, 1990s, the yen has been weakening. But more recently it hit a low of 160 to the US dollar, which is extremely weak. And part of this was the carry trade, borrowing in yen and moving it abroad, but also just government policy is at 0% for many years. So for mortgage rates in Japan, you can get a mortgage for under 1%.
Still today?
I think maybe 1.2. Probably a premium borrower could get under 1%, 10-year fixed at 0.8 or 1%, which is crazy, right?
And if you do 20-year fixed, how much
maybe 2%. So for your primary residence, now they do not lend so easily for investment properties because they have their own PTSD from the bubble where
Yeah,
they're
yeah,
overbuilt. So if you want to get an investment property, the rates are going to go higher.
Okay.
You might have to pay cash. But your primary residence, they support the families. The rates are really good.
Yeah.
So anyways, we had very cheap money in Japan, and and in the US, so the US was at 5.5% on cash. Japan's at 0. So of course, if you raise the bid, people buy US dollars and don't buy yen. Japan is weak. Now we've seen a bit of a reversal. The yen has gotten relatively strong in the last week or two. I don't think this will hold. I don't think so. In the very short term, the yen may revert to the median, or to the average. But I think in the medium to long term, the yen is weak just because they have so much debt. They have the highest debt to GDP. They need to promote their exports. They get all their richness comes from their exports, and they need a cheaper yen to compete with China. So the yen short term might strengthen a bit more. If there were a major crash, yes, the yen could rally even more because you would have the carry trade reverse. But longer term, I'm short yen, I think. And then in terms of money printing, so I think obviously the US is going to cut rates in September. We'll go from 5.5% down to 3 or 4. And other countries will cut more and more to keep it balanced. So all the G20 countries will be easing monetary policy. They also do what's called open market actions, which is buying and selling treasuries live to adjust prices. And they will, in the US, they'll go to banks and say, please start lending more. So what they call the requirement reserves, they will lower that, right? They've risen, they've raised the requirement reserves since Lehman shock because they don't want the banks to take too much risk. They will then lower that to say, look, you've got a bank, Mark, please lend a bit more. You don't have to keep your reserves as high. So they will do, and they also are on the phone with each other, right? They all call each other and say, what are you going to do? Please do this. So they will coordinate. Not when things are normal, but if there's a crisis, they'll get on the phone and they'll say, Japan, cut your rates. US, cut your rates. They do talk to each other. It's way more orchestrated than people think.
Harvey Williams, hi, nice to see you, man. Wonderful, he says. Nice to see you guys. He says, where do you see the Japanese yen going over the next 2 years or so? And how will this subsequently impact the dollar and overall price of crypto?
So I don't think that yen affects crypto much. Like I said, short term, because the yen was so weak and we're getting a move the other way, I think you'll get relative strength in the yen. Maybe not that extreme, just a modest strengthening within the next 1 to 2 years. But longer term, I'm bearish on the yen. I think it'll weaken versus US dollar. The US dollar will continue to be the strongest currency, and at will they'll be able to strengthen it. So it's the most, I think 80% of global debt is denominated, the contract is denominated in US dollars. So if you're in South Africa and I'm in Egypt, we're probably doing a US dollar denominated currency. Why? Because it's the most stable. So therefore you have liabilities. If we're going to pay off that loan, what do we have to do? We have to buy US dollars. I want to pay you out. And so there's a constant bid for US dollars globally. And it's not the same. No one's doing contracts in Canadian dollars. If you took a Canadian dollar to Holland, what would the bartender say to you?
Yes. That wouldn't fly.
He wouldn't even know what it was, right? But a US dollar might, with some exceptions, might be seen as a valuable trade. Right? Yeah. So the US dollar is dominant and will continue.
What's your opinion on gold? Because you're quite educated about that. Gold is $2,500 US. It continues to go up.
Yeah.
I've also, there are still people believing that a new bull market has started in gold, and so far the price has indeed been going upwards since 2018, where it found a bottom of $1,200 or so.
Yeah.
It's now doubled that, has been going up steadily for now 6 years. What's your outlook?
So I think it's great to have some of your portfolio in gold. I think it's a great cash cousin. So having something that's stable, it would be similar to maybe a US Treasury bond. It's probably not going to make a ton of money for you, but it's safe. It's liquid. You can sell it, and it gives you some diversification away from cash. So having gold is good. I think gold has held its value. It has not done extremely well. It's not performed over a long term compared to the S&P, for example. But I think it's a great, it's a unique asset. It has a long history. It could outperform. There is a chance of sort of a takeoff in it going up. But I think owning it is a good idea in more of your conservative, wealth preservation. I would put it more in a wealth preservation category than a tech stock. I like it. I used to own it quite a bit. My Bitcoin is sort of, I do believe the Bitcoin is better than gold argument. I know a lot of Bitcoin maxis think that way, but I do think Bitcoin will be a better gold in the sense that it is a fixed supply. It's the thing about gold is the gold miners sell it into the market. They have to, and they can produce more as the price goes up. So there's a constant sell pressure on gold. And so you'll see as the price goes up, the selling increases, or new gold comes online. I'm thumbs up on gold. I think a 5%, but it should be seen as a sort of cash adjacent.
You still have a 5% exposure?
No, I'm way down now, maybe 2 or 3%. But will it go to 5,000? Maybe. I think there's a lot of sell pressure. I'm not an expert, but my understanding is that the miners really want to sell. And the miners will also hedge their positions by selling future gold now. So there's probably mining companies that when gold was 1,200 were bidding forward to say, we'll sell it to you at either that price or 1,500 10 years out, right? So you have these hedges that basically mean that there's a lot of sell pressure. That's my 2 cents. So buy some. Buy some.
Gold did some research yesterday because I'm especially interested in gold mining production. Does that continue go up or sideways or down is very important thing in analyzing whether we're in a bull or a bear market for gold. Because typically what happens at the end of the start of a bull market is that you see that prices are too cheap for miners to produce it. And so you see that the mining production goes sideways for 5 years and even down, actually. That happened at the start of the bull market in 2000. The prices were too cheap towards the end of the 90s. The price was too cheap to increase production. And it happened several times before. I have a beautiful chart that I will share again under this video on Twitter for you guys, so you can look at it. But that happened again since 2018.
The mining, so they put the mines offline, as it were.
It went sideways, actually, yes, for 6 years now. The mining production, we hit an all-time high in 2018, but then in 2019 it really collapsed. Which was before COVID. I realized only later. I thought it was due to COVID, but actually that happened before COVID. So that was because the price was too low. And
makes sense. It's not profitable.
And the price was then going from 1,500 to 1,200 or so. It bottoming around 2,200 or even 1,000 shortly maybe. And that's when the production collapsed in that year 2019. And mining production I'm talking about, not recycling. I'm not talking about that. And since then it has gone up slowly. Also in 2020, the COVID year, and up until now, 2023, the numbers are out. It went up again 3%. Production, mining production.
Makes sense. Price goes up, production goes up.
Indeed. But we almost reached the all-time high of 2018 now. But we're basically flat since 2018. A collapse and a rebuild, but basically flat for 6 years. And that's really the same pattern as you see in the past. That's the start of the bull market. And prices Yeah. And
So miners.
Huh?
Miners, you'd invest in miners.
No. I will not invest in gold miners. No.
Just gold bullion.
To play the commodity bull markets, that's difficult. I don't have the answer to that. But I have 0%. I have no gold and silver yet. But I do have one hedge fund for 10% that does invest in commodities, but more like the value that he finds in the market with oil producers. And I do have that. I'm investing in a copper play. It is a copper mine, you could say.
Yeah.
But that's another 3%. So I only have 13%. I'm still not convinced, despite the strong evidence that we're at the start of a gold bull market, I must say.
I don't know. Yeah. Gold bugs are always disappointed, it seems. Eventually. I don't know. Yeah. Again, and that's why you size it. I think if you own, let's just say, gold bullion as both a cash alternative and a tail risk upside, that there's some, it goes to 10,000. That's a great way to play it. Yeah.
Yes.
The gold miners, the problem is they have normal businesses. They have staff and equipment and oil, fuel, and then governments saying, we're going to tax you and you can't do that. So they have a lot of business risk, and they have inflation where their costs keep going up. And if the price, their margins get squeezed sometimes. So the gold price needs to go up continuously for the gold miners to be profitable. So yeah, I got frustrated owning it for quite a while. And I've read all the books about why it should be 5,000 or 10,000 or 20,000. I've read all the books. It does seem like it's a small asset versus all the money in the world, and therefore should be valued higher. It's not happening. It goes back to our talk about maybe the gold bugs are right, but the market disagrees. And the fact is, so Tom Lee covers this. He says your average millennial is not buying gold; they're buying crypto, and it's a boomer asset, gold. Although governments buy it too. So will the next generation of investors buy gold? If it's a yes, you're doing well. If no, there's some risk to the downside over 10 to 20 years.
But
right?
yeah, it could be. So I think your idea is very good. Like if you look at great investors, one strategy I've seen is an investor who actually goes to 20% cash to 5%, between 5 and 20, based on whether there's exuberance in the market or whether there's fear in the market, greed and fear. When there's serious greed, he will go to up to 20% cash. When there is real fear, he will go down to 5%. That's his strategy. And thanks to just that, he has done very well over many decades. And you could actually, if you apply something like that, instead of cash, you can use gold actually, because indeed, in the long term, gold has done about 5% per year on average, which covers inflation, which is better than treasury notes, who only have like 3% on average, where you actually lose on average 2% per year to real inflation. So I agree, gold can be actually treated as cash. And then in the case that you have a real gold bull market, a commodity bull market, that will be your biggest money maker.
Kind of a free lunch there. Yeah. And gold versus like the Japanese yen, for example, is an amazing chart. Only gold versus US dollar hasn't been great. It's been much better in other currencies. Well, so has Bitcoin and crypto as well. But against all fiat, gold's done very well. Not so well with the US dollar recently, or over time. But if you look at gold and Egyptian pound or Argentinian peso, is it Argentinian peso? It's very, very good chart.
Yeah.
So good.
But I would recommend to outsource this problem, because I think just investing is very difficult. Gold miners, I believe, is really a very bad idea. Check out the videos of Marius on YouTube. He really goes why I hate gold miners. He has a series on that YouTube series, and he goes through all the gold miners he has invested in and how they fucked up big time. And he goes through 10 different gold miners that he invested in. and all of them were a total disaster.
Okay, yeah.
Because of how they are managed.
Yes, yes.
It's really extremely hard to make a success there. So if you decide to invest in commodity market, much wiser, I think, to outsource the problem to experts. You have managed gold mining funds that you can buy from Sprott and all that. Like they will have do a much better job than yourself if you really want to invest in that sector. And I do the same. I have a hedge fund of Guppy. He has a Twitter, and he's also an expert in commodities. He's invested mainly also in uranium long, and because he has a strong thesis there. There is money to be made there, I think, but you have to be very careful. We have Donaldo Amand. Crypto and Ethereum discussed, please, as well as gold and silver. Thanks. Ethereum is your main competitor as a Bitcoin maximalist. Do you hold Ethereum?
A very small amount.
Mm-hmm.
Yeah, small amount.
Mm-hmm.
It looks like, so Larry Fink has mentioned Ethereum a few times too.
Mm-hmm.
And of course, the ETFs are live. So it looks like it's going to get the thumbs up from institutional investors.
Mm-hmm.
Obviously, Ethereum has a large platform and projects built on top of it. So it can't really go away on that level as well. So I would be more bullish than bearish for it. And I hope it does well. You are more of an expert on it.
Yeah, I'm all. Ethereum, I think that they also really did the same what happened to Bitcoin BTC. For selfish reasons, the lead developers chose to not continue to scale Ethereum and instead scale it via layer 2s. So there's no more on-chain scaling on the map or roadmap, and they've really disappointed. In scaling it, transaction fees continue to be high for Ethereum, just like it happened for Bitcoin BTC.
Very interesting that happened, because that was the main criticism of Ethereum people to BTC, and every other coin was fees.
Yes.
And now fees are way up on
Indeed.
Ethereum.
And have now for 5 years.
Arguably higher than Bitcoin. I've had several times where Ethereum was much more expensive than Bitcoin for transfer.
Yes, and it's really disastrous even more for Ethereum because lots of DeFi is built on top of it, and you need cheap transaction costs, fees.
The average crypto holder doesn't have $100. They're only sending $200, and they have an $80 fee on that. Like if you're transferring millions of dollars, maybe you don't care so much between 10 and 80. But if your bag is $500, or you live in South America and you're not dealing with, and you have a $50 US transaction fee, you're not doing DeFi invest, or you're not doing any projects.
Well, DeFi requires a lot more transactions.
Yes.
And so if you have it becomes much more costly. A normal BTC transaction is only one transaction.
Yeah.
A normal DeFi transaction is 10 or
it's true.
Or 20, and so it's a real pity. Why it's happening in Ethereum, it looks like a little bit different than why it happened on BTC. Well, on BTC, I think it happened because of government pressure, but also because of self-interest of the lead developers who try to launch Lightning Network and that way profit from not scaling on-chain, but scaling via a network that they have more control and also financial kickbacks or financial incentive to make it a success. The same actually is happening with Ethereum, where the lead devs are involved in these layer 2 scaling solutions, which are new coins, where they have a big piece, or can get a big piece of the supply and make a lot more money than working just on Ethereum, because the amount of Ethereum they hold is a lot less in comparison.
Right.
And that's a real pity. But the thing is, timing, it could be that it takes many years, just like we saw with Bitcoin BTC, continue to go up, continue to preserve its dominance. The same may happen with Ethereum, that despite the fundamentals weakening, that it does, the story is so strong, investment story, and the money piling in from institutional investors and just new crypto investors that choose to just invest in the biggest one, that Ethereum may indeed continue to do well price-wise, despite its main network really weakening.
Well, liquidity is a huge issue. So even Bitcoin as a 1 trillion market, 1 trillion US dollar market cap is still too small for major players to come in because of the liquidity. They pump their own price. They start bidding against each other. Ethereum is definitely too small for global players with big bags to come in and invest. The liquidity is too small. So Bitcoin is not even there yet where there's enough, it's a big enough size market to absorb major purchasing. Like if you brought in $500 billion into Bitcoin tomorrow, it's not feasible. The price would skyrocket against that one buyer, right? And same with Ethereum, it's too small almost. And if you go further down into smaller coins, they cannot reach a global market investable fund that someone from Saudi Arabia, like a prince from Saudi Arabia, if they were to go buy, let's say, Cardano, they can't. It's not, there's not enough liquidity. So so bigger is better in that sense. Again, which is a non-technical view of crypto, right? It's a purely financial view of crypto.
Question of Harvey Williams. Does Curtis think that most BTC holders will become just as frustrated as current day gold bugs over the next 5 to 10 years?
No.
This was...
No, because gold's already 15 trillion and Bitcoin's only 1 trillion. Global assets are 500 trillion, right? So Bitcoin is far less than 0.3% of global assets. So frustration means it goes up 10x, 5x, 10x. So no, especially in 10 years.
But I've learned in the past that these kind of investment theses, when people talk about, hey, look how big the market is, and if we can just get a small piece of that, we're going to be fine.
Except that it's happening. Yes.
I think that's a dangerous investment thesis.
I think in 2017, it was pie in the sky, 2017, but not when you have the president of the US doing speeches on it. But yeah. Look, I'm already up quite a bit, so it's not, but gold's 14 times larger, and arguably its function is less, like its actual its portability is not the same, its divisibility is not the same. It's there's about 10 factors that make it not as good as Bitcoin in terms of a global asset class. But so the answer is no, but I might be wrong. I can always be wrong. I never argue I can't be wrong. Yeah, it's a calculated bet, crypto, and the upside, it's asymmetric, right? So any coin, Ethereum's at $2,500, it could go to 20,000 or it could go to 1,200. That's a great bet. That's a 0.5 downside with a 10x upside. That's an amazing bet. If you go to Las Vegas and you're getting those odds, you would never leave that table. So the asymmetry of crypto is still a great bet. All the coins, I think. The upside is a factor of 5 to 10 higher than the downside. Wouldn't you agree? At least, I mean.
Well, I think your argument is a very strong argument. If you look at the other asset classes in the world, real estate, bond market, stock market, compared to crypto, then indeed crypto has a lot of upwards potential. And indeed, generation shift, like the younger generation, values crypto more and will invest their inheritance for a bigger part in crypto than the elderly, where it's coming from. And this will put an upwards pressure on this new market of private currencies. I agree with that argument, and I think that really favors cryptocurrencies as a whole. But I think that's where we differ in opinion about Bitcoin BTC. And I think that's really like the big issue here. If you look at the internet market, for example, in the 90s, the big winners at the end of the internet bubble were companies like Cisco and America Online and Alta Vista, if I remember it correctly. Yahoo. And they had the largest market caps. But they were a total disappointment, and even went broke since then, which is now 24 years ago. Even though they were the market leaders then. But it's true that the internet companies have taken over the world in the meantime. But those market leaders that were first to market at the time and the biggest stories actually totally failed to capture the market and were the incumbents, who at the time, some of them existed already, like Amazon, but other ones were only later created, like and Google existed also, but some were later created, like all the social media. Facebook it was only in 2005 or so, and now social media is actually the biggest part of the internet. Twitter, and you have even newcomers today like TikTok, who have taken over the market. So it's really a come and go, and even the ones that were the leaders after the .com crash, that Google only became the leader after, actually are now in their downfall and see their market lose to newcomers like ChatGPT when it comes to Google search, their leading product. So it's really, if you want to be successful, the argument that a sector grows, that does not apply to the individual players.
Sure.
Your sector can grow a lot, but the individual players can fail, especially when they are market leaders that are not really doing a good job. And that's where my argument goes when it comes to Bitcoin BTC, and where I hope that you also and many of my followers make a shift in investing more in those incumbents, based on just like, do they capture the market or not? And also, of course, if you look at the valuation, because if you're already a market leader in valuation, then like best case you just keep that. But there's a lot more upwards potential in incumbents that still need to become market leaders. And I've tried that for many years myself, and it's a very difficult job, and with many failures likely. But you cannot really avoid doing that work, because the chances that you're investing in the leader now that will become will lose its market share is very big, actually.
Possible. Although I would say cryptocurrencies might be different than stocks, but I get your point.
Yeah.
And if you do look at if you look 15 years of crypto, the leaderboard has turned over except for Bitcoin. So what has failed is the challengers, and they've turned over, although Ethereum now is in that category, I think, of probably the number 2 winner, but so many others have come and gone. So, but I agree with you. Yeah, I agree. So therefore diversify, right? Therefore own the top 10 or own the 10 that you think are. I think liquidity is a huge challenge for these coins, perhaps, or dishonest founders. So it's just, I mean, meme coins are probably what, as a whole, are the third biggest market now. Is meme coins, which are self-declared jokes with rug pulls.
But the problem is, it's not easily solvable by just buying the top 10, because of the reasons you just said.
So what is the solution? Yeah, and I have tried buying smaller coins, and I've researched smaller coins, and I understand decentralized projects, truly decentralized projects. I think they're really interesting. I just see a lot of spinning of wheels and failure, usually human error or poorly aligned incentives, where you have the insiders pull out somehow.
Well, if you look at the internet.com top 10 in 1999 at the peak of the bubble, what were the winners that later on? Amazon and Google, were they in the top 10? I don't know.
1999. Maybe not.
Probably not.
Yeah.
Not Google, because it was still too small. But maybe Amazon was in the top 10.
Just barely, maybe.
Yeah. So if you would have to,
very few winners and very few sustained winners. You make a good point. But what do you do with that? Do you take more risk on that long shot, or do you go with shorter time frames? So perhaps your argument is good. Perhaps Bitcoin needs to be sold in the next 5 years, not the next 20. I would argue the timeline is still quite long for Bitcoin, but perhaps I would not make a 20-year bet on Bitcoin. I would more likely make a 3-year bet or a 5-year bet, which I am. I think your point becomes much more salient, or as time goes on. But then what do you do? Do you go for what? What's the coin?
Well,
a lot of people have made those bets, and a lot of people have regretted those bets.
Yes.
Unless you get in really early.
Yeah. Well, the way I think the way to do it is, if you look back, how could you have selected Amazon at the time and Google, without having 90% invested in the top 10 that all end up losers.
Nobody knows how to do that. Yeah.
Well, no. Well, I think one way to get them is like if you do a rational analysis based on adoption, like do they pick up in the amount of users, in the amount of revenues? Like if you would have done that analysis, then actually Amazon would have been part of your selection because they were growing fast as a retailer. They would make no profits. That's true. And that was the bear cases.
Yeah.
But they were picking up strong in revenues. Google, although they made zero money, that was the bear case. They were picking up strong in the amount of users using their search engine. So if you looked at those things, you would have selected those companies also, but you would have fallen for many others who were faking those numbers as well. But if you just have like, even if it's only 5% part of this portfolio, the winners like Amazon and Google, and you just have a buy and hold strategy, then you would have lost 90% still of your portfolio, 95. But if you kept those winners in, you would have made all and a lot more in the next 10 to 20 years. So
certainly,
applying that, I think, to crypto you can do, and that means you just really need to look at amount of users, really amount of growth. Is it really being used? Is it really growing? And for example, I think Monero is one of those coins. I haven't invested myself because of other reasons, but actually it's one of the few coins where you can say like actually user adoption is going up. You can see that in the amount of transactions, which can be easily faked, very dangerous.
Yes.
But I mean, there are many other statistics, on-chain statistics that you can look at, unique addresses. What else do you have?
So fees, of course, volume, transactions, unique addresses, transaction frequency.
Different kind of analysis you can do, I think, to a private currencies also, where you can make some better selections. I think that will be very important in this market. What you should not do is buy the latest fad. And that's really a sure way to lose your money, as also Peter Lynch learned us in the stock market. Like that's most inexperienced investors will just invest in what's hot, like artificial intelligence was hot.
Or the guy with the drug therapy. Sounds cool, right? Mushroom therapy for my stress. It sounds cool.
And typically when they are fat, they already went up a lot, but the chances are very high it will go down, and it does not have strong fundamentals. The growth is only temporary. In AI, you can see that clearly now. There's strong growth in those revenues of NVIDIA, but is that tenable? Is that will people continue to order? It looks like very much a Cisco story, where also you had strong growth in the 90s of Cisco equipment, but they lost their whole market because once everybody had an internet router, well, you don't.
How long was Cisco a good investment, do you think? I mean, how was it a 10-year, 15-year run?
Yes, something like that.
That's not even that long, 15 years, right? But
But after that, like it really totally collapsed because people don't.
But so many changes in technology. I mean, even now, but at that time, even more so, right? Like what was going to work and what wasn't. It was very volatile. That would be a caveat for that, because the tech, right? A lot of technologies were great. They just got moved out of. They just got jumped, right? So good points. And again, goes back to diversified bets, right? Either by asset class or even within asset classes. Let's say in crypto, okay, diversify your portfolio. But I'm not good at picking small coins, and I've had very bad experiences with that. So.
And the latest fad is you see a lot in the top 10. You will see coins that have gone and tremendous rise. They are very hot now. But hey, it's actually like if you invest in that, you just follow the latest fad, and you're already paying very high valuations, and the chances that they will actually become even bigger, and that their underlying growth story is really going to continue into the future. is low.
And they're all competing for the same types of investors. They really are. Like if you take out, let's say, Bitcoin and Ethereum, put them aside, you look at all the different coins, they're competing for that. And there's only so much money. Currently, Wall Street is not buying the 200th coin. So you have them competing with each other for the same buyer, which sort of.
And I think Solana actually does really come up here because that's actually the latest big fad. It went up a lot. It's coming in from nowhere. And actually, previous cycles, you saw always other coins coming from nowhere, up a lot. People made fortunes. But in the next cycle, they already lost serious ranking, and it's just one way down. Link was in the previous cycle, the big darling. And where is it today? And there is
Cardano's way down.
And there's no hope for them to come back even. So that's really dangerous.
And those are the top 20. Those are the big winners. The ones that should have momentum. So, all right, let's move on.
Harvey Williams, great questions, man. Mark, could you please tell us if you're still using Kelly Criterion? That was such an ingenious strategy. I'm surprised you don't talk about it much anymore. No, I've become more lazy, and I'm not applying the Kelly Criterion anymore. And it's really costing me a lot in potential return. So I should probably start using that again. Thank you for reminding, Harvey. And I agree. There are very few things of value when you're an investor that you can use, and this is one of them. The Kelly Criterion, you decide your allocation based on a mathematical calculation of how much is the upwards potential, and what is the chance, and what's the downward risk, and what's the chance for this to happen. And if you just fill in those numbers, it will give you how much you should allocate to this investment. Numbers change over time. When you change them over time, you will see that actually the recommended allocation, like for example, if your investment becomes successful and goes up, then you're now closer to the upwards potential, and the downward risk has gone up, is further down, but also the chance that you will go up there is lower, because you already went halfway, let's say. So you have to change those numbers, and then it just tells you need to now allocate less, and you're forced to actually sell, which is really very, very helpful because it goes against what you do naturally as an investor. As an investor, naturally what you do is you invest a little bit in something that has great potential and actually not that much risk, but you only invest a little. Then if it succeeds, it goes up a lot in your portfolio in allocation, but you're not selling because you're like, hey, I was right. And actually, I should have had initially a bigger allocation. Now I have that naturally, but there's no reason to sell because my